Hello, good morning. Let's confirm we're on the same page here. So if you can see my screen and you can hear my voice clearly, I would appreciate that you type in hi in the comment section so that we can get this session started. I've just had a little hitch with my sound quality here, so I'm trying to fix things. Please confirm that you can hear me clearly and you can see my screen. So let's see what's happening right here in the comment section. All right, I've got some feedbacks here. Thank you. 6677526 VV, good morning to you all. 998, good morning. 720. All right, A Carrie, good morning to you. Glad to have you around. Okay, all right, okay. 722 159. Oh, thank you very much. So I will take this feedback as a positive confirmation that we are good to go this morning. I'm excited to welcome you to another beautiful session on the X-Trend Speed. My name is Sheriff Daramola, and for the next 1 hour, I will be your host, where we shall be embarking on a trading journey, evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, it has been a very slow start to the week as we have been seeing some little consolidation phase here and there in the market, and things might look a little bit tense because price is not moving as expected. So we need some level of patience here for our structures to evolve and mature for us to be able to take advantage of this opportunity. So we shall be looking at how we are going to be using our patience and then how we want to be positioning ourselves in such a way that we can catch these moves when they finally happen. So before we go into the chart here, we will be looking at the economic calendar as usual to see if we have any macroeconomic events that we will be looking forward to guide our trading activities for today. And you all know that these macroeconomic events are like a key factor, like a catalyst, which is there to bring some liquidity into the market because of the high impactfulness of this event in the market. And for us on Wednesday, January 25, that is today, we really don't have any macroeconomic event to look out for based on the currency pairs we have been monitoring since the beginning of the week. So what we are going to be doing is to look at the chart from a technical standpoint to see how we could actually take advantage or how we should be able to position ourselves to catch some trading opportunities for today. And we should also take into consideration the fact that there are 3 macroeconomic events for the USD coming up tomorrow, and there is a tendency that we might be seeing some consolidation phase in the market in anticipation of this event, as most major players in the market will probably step aside, and this will reduce the liquidity in the market. And if there is liquidity, we will be seeing some consolidation phases here and there, and it appears we are beginning to see such things happen in the market right now. So we shall be looking at how we want to position ourselves and how we can take advantage of any trading opportunity for today. So my advice is that you stay tuned in so that you don't miss out on any of the ideas we shall be sharing during the live session today. So with that being said, let's dive into the chart right now. Let's see what has really been going on in the market at this point. So the first commodity we are going to be looking at this morning is the US oil, and let's quickly do a review of what our expectation was yesterday before we go into the details of what our plan will be like for today. So during the live session yesterday. Where were we during the live session yesterday? Okay, I think we were around the $81.80 level here. That is the support level of the channel we identified at the beginning of the week. I think I would like to run through this so that for those who are not part of this live session at the beginning of the week, you could have a clue into how we got to the structure we have right now and how we decided to make some certain decisions based on the current structure. So at the beginning of the week, we had the situation where price was caught within a channel between the $81.80 level, which was serving as the resistance level of that channel, and then we have the $81.20 level, which was serving as the support level of this channel. So this was actually happening during the early hours of the new week here, as we saw that little consolidation phase around that area, giving us a level of indecision in this market. And you know, from a technical standpoint, whenever we have a flat channel like this, all we do is to remain patient and wait out for technical patterns to give us a signal, and what we were expecting is either a breakdown of the $81.20 level to give us a signal of a buy momentum, or we look out for a breakout of the $81.80 level for an opportunity to buy. Hello, I'm so sorry for that breaking transmission. I had to attend to my baby, and I think that is sorted out now. So let's continue with where we are. So we were looking at the channel that we identified at the beginning of the week between the $81.80 level here and the $81.20 area, where we were looking out for either a breakout or breakdown of that channel to give us an opportunity to either buy or sell. And at the beginning of the week, we saw the breakout of the channel. We actually bought there. We saw some buy pressure around this area before the breakdown came again here later on Monday. And since then, we have been seeing rejection of this level at the $81.80 level to give us a clue of how that level has been a strong selling niche. And during the live session yesterday, we identified this bearish trend line after connecting the series of lower highs, and we said we shall be using this trend line to guide trading activity for yesterday. And we were actually looking out for selling opportunity using that structure, coupled with the $81.50 level here, which has been a strong buying niche later on Monday. And we said if we cite a breakdown of the $81.50 level, it will be a good opportunity for us to join the decline to the downside. And this is exactly what happened during the New York session yesterday, though we had a little breakout which took out some buyers. Those who had initiated the buy position around that area were taken out of that structure, giving us a false breakout at that point. Then price came back down into the $81.80 level, breaking down the structure to the downside, and we actually took advantage of that trading opportunity there. Then we added another position at the breakdown of the $81.20 level. At the end of the day, we had our TP target hit at the $80 level during the later part of the New York session yesterday. So it was quite a profitable trade for us on the USOil yesterday, as we were able to make the first position gave us about 150, and the second position gave us about 120 pips in profit. So for those who are taking advantage of this opportunity yesterday, well done guys. Kudos to you for being on standby. to catch this opportunity. Now, for those who had missed out on this opportunity, well, we still have a couple of days to go for this week, and I hope that the market will be presenting us with structures that we can use to join a trend continuation to the downside. So what are we going to be looking forward to going into the New York session today based on this current structure that we have in this market right now? Now, one thing you will observe as soon as price tested the $80 level here is that we started seeing some level of buying pressure coming in around this area. In fact, that lasted for about 2 hours. We saw the breakout. We saw the retest of that structure where price continued to find higher highs at this point. And with the situation we have here, we saw how price action fall or transition into an ascending channel here, and for like 6-7 hours we saw how selling pressure resumed at the $80.50 level, leading to the breakdown of this channel at the $80.30 level to give us a signal of a trend continuation to the downside. And for those who are taking advantage of the sell continuation to the downside here, well done to you guys for being on standby. And for those who had missed out on this opportunity, I'm of the opinion that below the $80 level here will seem most appropriate to join this decline to the downside. And the reason why that is simply because of this engulfing candle that we saw here in the last 4 hours. Here we saw an engulfing candle doing a final breakdown of the $80 level, which was holding by pressure sometime yesterday. Now we saw the breakdown of the structure, and it's going to be a beautiful situation for us to join that decline below the $80 level here. And if you look at the last candle here, you saw how the candle here closed in the form of a shooting star candle, a very beautiful sign that sellers are still very, very strong in this market. So we shall continue to look out for certain opportunities below the $80 level. So if you are in right now, set your stop loss, set your TP target, and let's continue to ride the move all the way down. And if we have a breakdown, I think I have another structure here we can use to add more position to our existing trade, which falls at around, let's see, I think around the 79. Hold on a second, I'll bring out my line chart to be more specific here. Okay, so we have the $79.75 level. So let me okay, so we use this too as well. $79.75. So I will place it at the bottom right hand side of my screen here. So I want to see another breakdown of that structure to give me another opportunity to add more position to the existing sell position that we have here. So let's continue to ride this move all the way down. And one thing about the $79.75 level, which I also want to call our attention to, that is this level here. If we scale a little bit up into the 4 hours time frame, hold on a second, you'll see what I'm talking about here. So look at what we have here on the 4 hours time frame. You can see that since the beginning of this year, we have this trend line, which price action has been respected. I think since on the 4th of January, we saw how this trend line has been a major determinant of price action. And since the breakout of the trend line here on the 11th of this month, we can see that price action has continued to trade right above that structure. So what this simply means is that if we look at what is happening currently, we can see that price is right around the $79.75 level, a level which shares a beautiful confluence with that bullish trend line. So we are at a very critical point in the market right here. So a further breakdown of the $79.75 level will be a beautiful sign that the bullish trend line here is no longer strong enough to hold up the bullish momentum. So we want to be joining a decline from that level to the downside. And for our take profit target at this point, I will suggest that we have our TP target between the $79 level and the $78 area, an area which has been a strong demand zone in the past. So let's place our TP target somewhere around that area, and if price action continues in our favor, you will be having about 100 pips to a maximum of about 160 pips to catch here if price action breaks down the $79.75 level. So this is what we are looking forward to here on the US oil. Now, another thing we should also take into consideration, considering how this bullish trend line has been guiding bullish momentum so far this year. And if we take that into consideration as well, we should also have an open mind for the possibilities as buyers could likely come in at this point. Now, if we are going to be buying the US oil, we need to see things more clearly. And if we look at the structure here and see what has been happening here since yesterday, we can see that the $80.50 level had been holding selling pressure for some time now, as every attempt by the buyers to break out of that structure has been met with strong resistance from the sellers. So for us to buy the US oil here, we would like to see an actual breakout of the $80.50 level to give us a signal that buyers are likely respecting this bullish trend line one more time. So for us to buy, please don't buy now. We're looking out for buy opportunity above the $80.50 level. If I scale down to our 1 hour time frame, I think we will be seeing things more clearly here. So this is the structure I'm talking about here. So we have the $80.50 level sitting around here, and if you look at what has been happening, you can see that every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers. So this is a selling niche, so we want to see an outright breakout of the structure to give us a good bullish signal for us to join that bullish momentum to the upside from there. So let's see how price action plays out in the next couple of hours, and I hope you screenshotted my screen so that you can use it as a reference point when you're about making your individual decision on the US oil for today. So if you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, and I will be taking the next 10 to 15 seconds to read through the chats and see if there are any questions whatsoever before we move on to the next option. So let's see what's happening right here in the comment section. Okay. All right. Okay, I think all right, so in the absence of no questions, I would assume that we are on the same page here. So let's move on to the next option. And the next option we shall be looking at this morning is the US tech. So we had a little bit of the volatility in the US tech market yesterday, as we saw, hold on a second, as we saw price action juxtaposed between the 11,880. Remember the channel we identified at the beginning of the week. So we saw a little consolidation phase here, which led to a level of volatility in this market, taking us out of all the positions we had. So let's quickly run through how we have been trading this since the beginning of the week. So at the beginning of this week, we initially identified a channel between the $11,640 level, which was serving as the resistance point at the beginning of the week. Then we also had the support level of the channel sitting around the 11,590. You could call it 11,600 if you want to round off that figure. And you know, whenever we have a flat channel like this, we want to be patient for either a breakout or breakdown of the channel to give us an opportunity to either buy or sell. And what happened here on Monday was quite interesting, as we saw the significant breakout of the $11,640 level, giving us a very beautiful opportunity to buy the US tech. And in fact, we bought there and we rode the move all the way up as price action moved over 270 pips in our favor before we started seeing this consolidation phase that has been happening here in the last 48 hours. So with the situation we had yesterday, we identified that price action is back into the structure where we identified this channel, and we said we shall be using the 11,840 level to guide any bearish momentum here, as we saw price action break down that level during the live session yesterday. And in fact, price action moved about how many pips? Over 70 pips in our favor before we saw this bullish momentum, which took us out of our position with some small profit. And during the New York session yesterday, we saw this huge consolidation phase. We saw a huge volatility within this channel before price action did another breakdown of the $11,840 level, hereby pushing price back down to the downside and coming into the TP target zone we identified yesterday live session. So for those who had actually joined this bearish momentum here, well done to you guys for being on standby to catch this move, as you would already have taken some profit with at least a minimum of 100 pips at this point in time. So now, with the current situation we have here right now, what is going to be our next line of action? What are we planning to do for today? And if you have a position running here, you still have your sell position running, well, I will suggest that you move your stop loss right now to protect your position against any sudden pullback that might likely happen. And to be on the safer side, I will be suggesting that the $11,750 level seems most appropriate to lock in some profit, and let's give some room for price action to breathe. Probably it's going to be doing another trend continuation to the downside, or we will definitely be getting ready to join a bullish momentum. So this is what we have right now. So how do we intend to take advantage of a trading opportunity for today? That's the next question. So before we go into the details here, let's run through the daily time frame. Let's have an holistic view of what is really going on in this market. Then we come back to our lower time frame to make a decision for today. So this is the daily time frame here, where we understand the fact that price has been bearish, at least since the beginning of last year. We saw how the sellers are taking over this market, and they have continued to find lower lows and lower highs. And as a result of this, we were able to connect a series of lower highs here to give us that resultant bearish trend line that you can see on my screen right now. And with that being said here, during the beginning of this week, we noticed that price action was heading towards the bearish trend line, and remember, we took advantage of this bullish momentum that broke out of the trend line here. And one thing about this current structure is the fact that the trend line here also shares a beautiful confluence with 11,700, a level which has been a strong selling niche in this market for a couple of months. As you can see here, it has been a strong selling niche, so we need to take more attention on the 11,700 to see how participants in this market will be reacting to that structure in order to make a decision for today. So right now we saw a breakout of the 11,700, and it appears price is doing a retracement back into the $11,700 level, which is also sharing a confluence with that bearish trend line that you can see on my screen right now. So with this being said here, there are two things we want to be looking out for. Let me zoom this out a little bit so that we can see things more clearly here. So our center of focus right now is around the 11,700, and there is a likelihood that one, we could see, following this impulsive move that broke out of this trend line, we might see a situation where price comes back to do a retest of structure, and from that $11,700 level, probably on our lower time frame, we could see buy pressure from this level to incite another wave of bullish momentum. That is one scenario we want to be looking at on our lower time frame. And then the other possibility that could happen here is if price breaks down the 11,700 and we start seeing selling pressure one more time below the structure, then we might likely want to join a decline to the downside. And considering the fact that the 11,700 level has been a strong selling niche in this market, we will definitely be looking out for selling opportunities if price action breaks down the $11,700 level. So that is the view we have here on the daily time frame. So let's scale down to the 1 hour time frame and let's see how price action is currently reacting to the $11,700 level to decide what our next line of action will be for today. So if we scale down to our lower time frame, so we are the 1 hour time frame right now, and the next thing we want to be doing is to identify the $11,700 level. And if we zoom things out a little bit so that we can see things clearly here, okay, so $11,700 should fall around here. So this is the 11,700 here. Okay, so for the sake of clarity, let's relabel this, and I would like to make this a little bit bigger to emphasize its importance at this juncture. Okay, so we are right at the $11,700 level, which falls within the TP target zone we identified yesterday. And remember, we also said this zone will be serving as a potential buy zone if we start seeing some reversal pattern within this level. And coincidentally, we have our $11,700 level falling within that zone at this point. So what are we going to be looking out for going into the New York session today? And since we already have a potential buy zone here, we are going to be looking out for buying pressure right above the 11,700. It could transition into our double bottom structure, which is a strong reversal pattern, or a head and shoulder pattern, wherever it is. Breakout retest on our lower time frame, then we will be looking out for opportunities to buy the US tech at this point. So that is one scenario we want to be looking out for going into the New York session today. Then the other possibility that could happen here is if price breaks down the 11,700, which will definitely be a bearish signal at this point, and if a sell pressure continues below the 11,700, or the price action transitions into a trend continuation pattern, we want to be joining a decline or adding more position to our existing sell position on the US tech right below the 11,700. So going into the New York session today, we have a structure that we are going to be using to guide our trading activity, which is the 11,700. So if price action transitions into buying pressure on our lower time frame right above the structure, then we get ready to buy. And if we see price breaking down the 11,700 with selling pressure resuming right below the structure, or if possible price action transitions into a trend continuation pattern, we want to be joining that decline to the downside. So these are my views here on the US tech. If you have any questions, feel free to drop your inquiries in the comment section while I move on to the next option. So I will be checking the comment section from time to time to see if there are any inquiries. Feel free to drop anyone if you have one in mind. So moving on now, we are going to be looking at the GBPUSD. And on the GBPUSD, we have been in a profitable situation here since Monday, I guess, where we identified a channel. Remember at the beginning of the week, where did the week start here? Okay, so we had the week started at the 1.2400 level here, a very important structure which we identified on the daily time frame. So the week started on a bullish note, but one thing we noticed is that as soon as price got into the 1.24450 level, we saw a sharp rejection of that structure to emphasize some level of strength in the sellers at that point. And this led, the rejection of this 1.24450 level led to the breakdown of the 1.2400 level, triggering our sell position at this point. And then we added another position as soon as price came back to do a retest of the structure that was broken to the downside, and price had moved significantly well since then, as we currently have price run with about over 100 pips in our favor at this point in time, and it appears the trend continuation still want to continue. And for those who had been part of this profitable trade, well done to you guys. Kudos to you for being on standby to catch this move. And during the live session yesterday as well, we were looking for another opportunity to join a trend continuation to the downside, as we were around here during the live session yesterday. We were around the 1.23200 level, and we identified a structure on our 15 minutes time frame. Let me scale down to the 15 minutes time frame here to show you what we identified. And one thing we said here is that we want to see a consolidation phase between the 1.23200 level and the 1.2300 area, where we shall be looking out for a breakdown of that channel to give us a signal to continue to sell. And this actually happened as price action moved about about 40 pips in our direction before that bullish momentum came in at that point to take us out of that position. So with the situation we have here, and taking into consideration the impulsive move we saw on Monday and Tuesday, look at this. We had this impulse leg, and it appears price gone through a retracement phase here, and using my Fibonacci retracement tool to identify a golden zone area where we shall be looking out for selling opportunities within our golden zone area. So we have an area between the 50 and the 78.6%, which falls right above the 1.22350 level. And you can see what happened here in the last 12 hours. We saw that as soon as price got into the 50% retracement of that previous impulse leg, we saw selling opportunities around that area. We saw selling pressure, negating all attempt by the buyers to break out of that structure. And so with that signal here and multiple rejection of the 1.22350, it was a good opportunity to join that decline to the downside from that level. And if you are joined from that level as well, well done to you for being on standby to catch that move, as you will currently be running with about how many pips? About 42 pips in profit at this point. So if you are taking this opportunity right below the 1.22350 level, what we want to be doing now is to move our stop loss. And for me at this point, I will be suggesting that you move your stop loss to somewhere right above the 1.23200 level here, lock in our profit, and let's wait out to see how price action will be reacting going forward. Now, with the current situation we have right now, we can see some oscillation around the 1.2300 level. And for me at this point, I will prefer that we remain patient here. Look out for this breakout to actually happen. Let's wait for this candle to close, and if we have a retest of structure with selling pressure below the 1.2300 level, then we could add more position to our existing trade. And if a further breakdown of the 1.22500 level happens, we want to be adding more position to our existing trade here. Remember, we have a buy zone here. We have this demand zone at this point at the 1.22640. So we want to see an outright breakdown of that level to be able to add more position to our existing trade here. So let's see how this is going to be playing out. So for today, for the New York session today, we shall be using the 1.23300 level as a yardstick for trading activity. So we want to see price action drop below that level, form selling pressure below the structure. Then we want to be thinking of adding more position to our existing trade on the GBPUSD. All right. Then another thing I would like to call our attention to here is that if we see what happened here during the New York session yesterday around the 1.22660 level, that is this point, we saw buy pressure here. So like I said earlier, I want to see price break down that structure for me to be comfortable adding more position to that trade. So if price finds it difficult to get to this point and we start seeing some consolidation phase above the structure here, then that could likely transition into a higher low. And when we sight a higher low like this, the chances of a bullish momentum is becoming very visible. So if that happens, then we want to be seeing a breakout of the 1.23300 22350 level, buy pressure above that structure to join a bullish momentum to the upside. So remember what I said here, a bullish momentum will only come if price action is unable to break below this previous structure here. So whatever that is going on here, if price finds it difficult to break below the structure, and if at any point during the New York session today we start seeing some consolidation phase around here, leading to price action climbing to the upside with some level of bullish momentum, then this is a very good opportunity to join a bullish momentum at this point. But if a further breakdown of this 1.22650 level happens, then we want to be happy and comfortable to add more position to our existing trade on the GBPUSD. So these are my views here. If you have any questions, feel free to drop your inquiries in the comment section, and let's see how I can be of help in that regard. So moving on here, we are going to be talking about the XAUUSD, I guess. And on the XAUUSD, we've had choppy situations here on the XAUUSD since the beginning of the week. And one thing, where were we doing the live session yesterday? We were around here. Hold on a second, let me quickly run through that. Okay, so we were around the 1935 level. Remember, we took advantage of this buy position here above the 1930, and then we added another position at the breakout of the 1935, and I told you to move your stop loss accordingly to lock in some profit. And what happened during the New York session, I think a couple of hours into the New York session, we saw the breakdown of that level, taking us out of all the buy positions we had yesterday to close with some small profits at that point. Now, since the breakout of the structure here, one thing we have observed is that as soon as price gets into the $1,940 level, we have been seeing some selling pressure coming in from that structure. And if we look at how that level has been here, we can see that buyers have found it difficult to break out of this level. At least since the beginning of last week, we have been seeing how the sellers have been trying as much as possible to push price to the downside here. So before I go into the details here, let's scale up to the daily time frame. Let's have an holistic view of what is going on in this market. Then we come back down to make a decision on our lower time frame. So right here, this is the daily time frame rather, and we observed that since the beginning of this year, price action has been bullish. Since the breakout of the $1,820 level, we have been witnessing a bullish momentum on the XAUUSD. Price has continued to find higher highs, breaking out of structures like the $1,860, the $1,900 level. And one thing we noticed is that as soon as price got into the $1,940 level since last week, we have been witnessing selling pressure from that area. And in fact, throughout the course of last week's trading session, we saw how price was caught within a consolidation phase between the $1,940 and the $1,900 level to emphasize some level of indecision in this market at that point. And whenever we have a channel like this, all we want to be doing is to be patient, waiting out for a breakout or breakdown of this channel to give us an opportunity to either buy or sell. So if a breakout of the 1940 happens, we want to be buying, and if a breakdown of the $1,900 level happens, we want to be selling the XAUUSD. However, it is notice that since the beginning of the week, price has remained within this channel, and we have been seeing some tendencies of bullish momentum coming in. As you can see, buyers continue to knock against the $1,940 level, knocking that door, hoping that price will break out that structure. And one thing about this current structure, and considering how buyers kept on knocking at the 1940, is that if a breakout of this level happens, the move is going to be very massive. So we want to position ourselves in such a way that we can catch that move. If that is what is going to be happening here, then another thing that could happen is that a selling momentum could bring price to break down the $1,900 level if the sell pressure below the 1940 continues. Now, how do we position ourselves to join or anticipate either of this move? So what we are going to be doing is to scale down to a lower time frame, like the 1 hour time frame, where we want to see how price action is reacting to the $1,940 level to decide if it is appropriate to continue with our sell position at this point. So scaling down to the 1 hour time frame here, this is what we were able to find here on the 1 hour time frame. Now, looking at the 1 hour time frame, like I said earlier, we have been witnessing selling pressure below the 1940, which has been consistent, which triggered a sell position at the 1935 yesterday. And right now, price is around the 1930 level, a level which shares a beautiful confluence with this bullish trend line, which has been guiding bullish momentum. Since when it is that? I think since the beginning of the year, I guess. Yes, since the beginning of the year, we have been seeing this trend line guide bullish momentum here, and price is right around that trend line. In fact, this candle that is running now has broken that trend line to the downside. So this is a sign that sellers are gradually coming in this market. So if you are taking advantage of the move at the 1935, you want to be moving your stop loss to somewhere right above the 1930 to lock in some profit here. And then if you are not yet in this trade, I will suggest that we look out for a breakdown of the $1,924 level here to look out for selling opportunities to join a further decline to the downside. So let's remain patient here. So if you are not yet in this trade, let's wait for the breakdown of the $1,924 level to join a decline to the downside. And another thing about this current structure is, if we consider the breakdown of this bullish trend line here, and if this candle closes below the structure, below the trend line, and at one point we start seeing some bullish momentum bringing price back into the trend line, a line which also shares a confluence with the 1930 level. If we start seeing selling pressure below the structure on our lower time frame, we also want to be joining a decline from that level. And with a further breakdown of the 1924, we had more position to our existing trade. So this is what we are going to be looking forward to on the XAUUSD for today. So I hope we'll be on standby to catch either of this move when they finally happen. If you have any questions, feel free to drop your inquiries in the comment section while I move on to the last pair for today. And the last pair for today is going to be the silver, the XAGUSD. So on the XAGUSD, let's quickly run through the daily time frame first of all here. Let's have an holistic view of what our expectations are. And on the daily time frame, what did we identify here on the daily time frame yesterday? Well, looking at the daily time frame, hold on a second. I think we used hold on a second, please. I'm trying to bring up a chart here. So on the daily time frame, we initially identified a bearish trend line, which has been respected for the last 2 years here. And after connecting the series of lower highs, we have this bearish trend line figured out. Then in addition to this bearish trend line is this important key level at the $24 level. Let me extend this out a little bit so that we can see things more clearly here. So we have the $24 level here. And in fact, throughout since 2021, that level has been a major determinant of price action, as you can see here. And one thing about the trading session last year is that we saw this bullish momentum that started in the month of October and which led to the breakout of the $21 level, pushing price back into the $24 area. And what makes this more interesting is that the $24 level shares a confluence with that bearish trend line. And we might likely see a situation where price will continue to the downside. As you can see, as soon as price got into the $24 level, remember a level I said shares with a confluence with the bearish trend line, which has been holding bearish momentum for the last 2 years. we begin to see some selling pressure right below that structure to emphasize that there is a tendency that sellers might likely take over this market. So with the consolidation phase identified here, all we needed to do is to scale down to our lower time frame to identify the structure that this consolidation phase has evolved into to decide how we want to be trading this. And when we scale down to I think the 4 hours time frame, I guess it was the 4 hours time frame we used initially, we were able to identify a channel between the $24.50 level, which have been serving as the resistance point for the XAGUSD in the last 1 month. As you can see, every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers. And then we also have the support level of that channel sitting at the $23.20 level to give us a consolidation phase and indecision in this market. However, after looking at what has been happening here in the last couple of weeks, we saw that last week trading session, we saw, okay, at the beginning of this week, we saw this sudden breakdown of the $23.20 level, something that has never happened in this market in the last 1 month. And you can see every attempt here by the sellers to break down the structure has been met with strong resistance from the buyers. But at the beginning of the week, we saw a significant breakdown of the $23.20 level to signal that there are selling traces of sellers in this current market. Now, if we scale further down to the 1 hour time frame, this was what I was able to find. So this is the breakdown we saw on the 4 hours time frame, and immediately we saw some buy pressure come in. And if we take into consideration this previous impulse leg here, which broke down that support level there, using our Fibonacci retracement tool, we should be aiming at the between the 50 and the 78.6% of the previous impulse leg as an area to look out for selling opportunities. And why is that? Well, I'll show you why. Since we had an impulsive move to the downside, I want to see this move as a retracement of that impulse leg. And as you can see, as soon as price got into the area between the 61.8% of the previous impulse leg, we started seeing some selling pressure come in. So every attempt by the buyers to continue to the upside has been negated here, especially at the $23.75 level, to emphasize some level of strength for the sellers at this point. So what we are going to be doing now is to use the structure that I was able to identify here, that is between the $23.75 level and the $23.50 level as a yardstick for trading activity for today. And one thing about the $23.75 is that if you look at what happened here on Monday, we saw the breakdown of that structure. And from a technical standpoint, whenever we cite a breakdown of a structure, price is always coming to do a retest to join a decline trend continuation to the downside. And with the appearance of selling pressure right below the $23.75 level, this is a very good sign that we might be selling the XAGUSD anytime soon. So to guide our trading activity for today, this is what I'm looking out for. The $23.50 level breakdown retest of the $23.50 level will be a beautiful scenario to join a decline to the downside. So we want to be seeing selling pressure right below the $23.50 level here to join any selling momentum from this point. And if a further breakdown of the $23.20 level happens here, we want to be adding more position to our existing trade. So I would like to label this, we call it sell breakdown retest of structure. Retest of structure. So we had more position at the breakdown of the structure as we continue to guide our bearish momentum to the downside. So let's see how this plays out in the next couple of hours as we continue to monitor price action here. If you have questions, feel free to drop your inquiries in the comment section, and let's see what we have here. Okay. So in the absence of no questions, I want to assume that we are good to go. All right, so in the absence of no questions, I would want to go into doing a recap of what we talked about today before we call it a day here. And the first commodity we talked about today is the US oil. And on the US oil, what is our expectations here? So on the US oil, let me zoom this in so that we can see things clearly here. Okay, so we've already witnessed a breakdown of the $80 level here, giving us a good sign that sellers are very strong here, breaking out a structure which has been a buy niche in the past. That was yesterday we saw that level where buy pressure came in, so that was where we took our TP target. That's where we hit our TP target, and since price got back into the $80.50 level here, we have been seeing selling pressure from that level. And the last candle here closed in the form of a shooting star, which is a beautiful sign that sellers are still very strong in this market. So I've told us to place a sell stop order right below the $80 level with the hopes of adding more position below the $79.75 level if price action breaks down that structure to the downside. Now there is a catch to this current structure, which I explained when I scale up to the 4 hours time frame here, and that was the fact that price has been on a bullish momentum in the last couple of weeks, as you have this trend line guiding bullish momentum, and currently price is around that bullish trend line. So in as much as we are looking forward to a further breakdown of the $79.75 level, we should not ignore the possibility that this trend line still has a capacity of holding bullish momentum here. So if we are going to be buying here, I would not suggest to be buying around here, considering this engulfing candle that broke down the $80 level, but instead we shall be waiting for price action to break out of the $80.50 level. So for us to see things clearly here, I will scale down to the 1 hour time frame and zoom into the current structure. So like I said, I will not be thinking of buying unless price action does a breakout retest of the $80.50 level. So if that happens, that is, price takes us out of our sell position and climbs above the structure, and we continue to see buy pressure above the $80.50 level, then we are good to buy the US oil at that point. So that is my view here on the US oil. I hope you have screenshotted my screen so that you can use it as a reference point when you're about making your individual decision. Then we went on to talk about the US tech. On the US tech, we have a profitable situation here. At least since the beginning of the week, we have been profitable on the US tech. Remember, we took advantage of the SPY position above the 11,640 level, which gave us about 270 pips before price action was caught within a consolidation phase between the 11,880 and $11,840 level, and we sold below the structure. Price action comes into our TP target zone here. So what we are saying now is that we want to remain patient for today to see how price action will react to the $11,700 level here. And one thing we said here is this is what we are going to be looking forward to around 11,701. For any bullish momentum, to take advantage of a bullish momentum from the structure, we want to see buy pressure resume on our lower time frame above the 11,700. So it could come in form of a double bottom structure, a head and shoulder pattern, a falling wedge, whatever it is. Look out for a breakout retest on our lower time frame, then we could join a bullish momentum at that point. However, if it so happens that price action breaks down the $11,700 level here with selling pressure below the structure on our lower time frame, then it will be a good opportunity for us to add more position to our existing trade on the US tech. So this is what we are looking forward to. So the 11,700 remains our yardstick for trading activity for today. So moving on, we talked about the GBPUSD. And on the GBPUSD, we have been on a sell position since the beginning of this week after joining the breakdown retest of the 1.2400 level. And we also identified a sell window around the 1.22350, and following the breakdown of the 1.22350 yesterday, price action came back to do a retest of structure, and since then we have been seeing multiple rejection of that level to emphasize the strength of the sellers at this point. And because of this, we had a position triggered, and for those who are taking advantage of the sell position below the 1.22350 level, we have told you to move your stop loss to somewhere right above the 1.23200 level to protect our position against any sudden pullback from this point. Now, going into the New York session today, I told you that we want to see a breakdown of the 1.2300 level. Let this candle close with a breakdown of that structure, setting pressure below this level, then we want to be joining a further decline to the downside. And there is a catch to this current structure which I explained to you, and that is the observation of the 1.22650 level, which has been a buy niche for participants in this market yesterday. So what I said is, if this move here, the price action here finds it difficult to break below this previous structure, and at the end of the day we have a higher low here. So this is what I'm saying here. So even if price breaks down the structure and we start seeing a consolidation phase around that area leading to a breakout of structure, then this will be a good sign that the buyers are coming in at this point. So if a higher low happens around this area, then we should be getting ready to join a bullish momentum at that point. And now, talking about the sell position here, if price action continues to the downside, breaking below the 1.22500 level, we want to be adding more position at that structure. So this is what we are looking forward to on the GBPUSD. Then we went on to talk about the XAUUSD as well, as we have a beautiful setup here. We have been enjoying a bearish momentum since the beginning of yesterday's trading session, as we joined below the 1935 as price action continued to find lower highs. However, we have a bullish trend line here which has been guiding bullish momentum for in the last couple of weeks now, and it appears that line has been broken to the downside. So what I said we should be looking out for going into the New York session today are two structures. One is the 1924. If price action breaks down that structure with selling pressure below this level, then we want to be adding more position to our existing trade. And if you are not yet in this trade, it's an opportunity for you to join that decline to the downside. Then the other structure we are looking forward to is the 1930 level, which is around this level here. And how are we going to be taking advantage of that? Well, we are going to be looking out for price coming back to do a retest of the structure, selling pressure below this level, then we join the decline to the downside. A further breakdown of the 1924 welcomes additional position to our existing trade. And we also have a structure here at the 1917 where a breakdown retest also will be welcoming additional position to our existing trade. Then we went on to close the day with the XAGUSD, that is the silver, and we were able to identify a simple setup here on the silver, as we took into consideration this impulsive move that started this week on Monday. We saw this impulsive move, and this bullish momentum here is seen as a retracement of that impulse leg. And after using our Fibonacci retracement tool, we identified a sell window between the 50 and the 78.6% of the previous impulse leg. And what we saw here is that as soon as price got into the 61.8% of the previous impulse leg, we have been witnessing selling pressure from that level to emphasize some level of selling strength in this market. So what I said we are going to be looking forward to today is to look out for selling opportunities below the $23.50 level. So what we want to be looking out for is a breakdown retest of the structure, then we join the decline to the downside. And if a further breakdown of the $23.20 level happens, we want to be adding more position to our existing trade. So these are my views here on the XAGUSD as well, and on this note I want to be dropping the curtain on today's live session. It has been a wonderful moment, so let's be on standby to catch either of any of these opportunities that we are able to simulate during the live session today. And I hope that when we come back here tomorrow, we shall be starting on a very positive note. Thank you very much for being around. I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time. Let's come here again to review all we have been monitoring since the beginning of the week, and at the same time get ourselves prepared for the New York session tomorrow. Do have a wonderful evening. Bye bye.